Hello, my name is Alan Adamer, and today I wanted to talk to you about Solve for X, the short-term rental tax gap. An overview of our company. Harmari was developed by LTAS Technologies, a company that was founded in 2011. Our first customer was OMVIC, a DMV-style enforcement agency to identify unlicensed car dealers, where investigators and detectives are fighting property crime. Harmari then expanded into fraud detection for tax and revenue agencies, insurance investigators, and retail loss prevention investigators. Remember the person on the right in this State Farm commercial who claimed to be a French model and is really bad French? The lady in the middle naively believed on his online dating website that he was a French model. Why? Because she thought everything on the internet is true. Who told her that? The internet. As investigators, we need to remain vigilant to ensure that any information collected on the internet is independently vetted and validated against other types of data. There are a few goals that are critical to the success of any short-term rental tax and compliance program. Those goals start with first establishing a physical nexus with your jurisdiction. One thing that's important is the exact address of the short-term rental in question. Some sites, such as Airbnb, randomly scatter the location peg for the short-term rental within a 0.3 mile radius, which makes it harder to locate. Secondly, another critical aspect of establishing nexus is using a proper shapefile, which indicates the boundaries of your jurisdiction. And the best way to ensure that you only collect those properties in your jurisdiction is with a shapefile that's usually provided by the GIS department. Secondly, in a tax program, typically you want to establish a minimum amount of taxable sales that happened and then compute the taxes owing from that calculation. The thing to factor in is how many of the transactions occurred within the statute of limitations. Typically, most jurisdictions have a 3-year plus current year rule. One model to estimate minimum taxable sales is using the reviews that are on the short-term rentals website. So reviews can translate into past transactions. Multiplying the reviews by the minimum number of nights the property can be rented, multiplied that by the average nightly rate, can give you a good estimated minimum taxable sales figure. Another model that can be used is forward-looking calendar days. So by looking at how many booked days the rental has in the calendar, multiplying that by the average nightly rate can give you another estimate of minimum taxable sales. Another very critical aspect of STR tax compliance is establishing the real identity. You do not want a bill going to the wrong taxpayer. That will cause problems in the mayor's office or the governor's office. I'm going to talk more about this later. Finally, the next compliance goal is cross-checking an existing list of taxpayers or licensees against the one collected from the short-term rental platform. One key aspect is determining whether the property is operated by a property management company or whether it's owner-operated. There's a higher likelihood of non-compliance with an owner-operator. Secondly, you can see whether the license for that operator is current or expired. If it's expired, it may be worthy of a simple reminder that they need to update their license. Here's another important slide showing you what the expected amount of turnover in inventory is each year. So I took all of the short-term rental listing inventory of a major touristic destination in the Midwestern United States, and I took the year the ad was created and I broke it down by year according to this pie chart. If you were to look at the year 2016, you would see 21% of the total inventory was created in the previous year. This is absolutely critical when determining the amount of effort to put into a multi-year compliance program. The amount of inventory turnover dwarfs the total inventory. So it's important to note that. Monitoring is a lower cost than investigation. Here's a long view of a 5-year STR compliance program. Typically, the focus in the first year is identifying the backlog of short-term rental properties on each platform site. While the first year abates, the second, third, fourth, and fifth year then goes into a maintenance mode, which means much fewer properties need new identifications. It only depends on the amount of turnover of new properties, not on the total inventory. Some STR compliance vendors out there, our competitors, price out the project by the total inventory each year. However, the amount of identification cost significantly drops in year 2 through year 5. Harmari recognizes this, and our pricing is very competitive to our competitors because we factored this cost in. Harmari is going to save you money over a multi-year project for STR compliance. VRBO is a very popular short-term rental website. Note that VRBO and HomeAway merged and they have the same inventory of short-term rentals. This pie chart indicates the probability of identifying a given short-term rental and where the data comes from for that identification. You can see 30% of the properties are identified simply by phone number. The second section identifies short-term rental properties using a secondary website. For example, if Bob has a cabin in the woods and Bob puts a property on VRBO, he's going to have a hyperlink to his own website, bobslogcabin.com or bobsbeachhouse.com. That secondary website provides valuable information to identify. Third, property records are also critical to identifying a short-term rental. So county property records, deeds, ownership, property tax rolls, these are the raw materials required to identify short-term rentals and their operators. And another piece of the puzzle is social media. So their social media profile, their profile pages, their business pages, all play a role in identifying the operator. So this leaves 13% of the properties as unidentified. Unfortunately, not every property can be identified with these methods, but majority of them can be. So AirBnB is a different type of short-term rental platform than VRBO or HomeAway. The main difference with the identification challenge is the lack of phone number and the random scatter of the location of an Airbnb short-term rental. So you can see that there is no wedge in the pie chart for phone numbers at all. However, there is a wedge for identifying secondary websites, for identifying property tax records associated with the operator and the property, and also a heightened amount of research into social media to identify the operator. This chart shows a typical non-registration discovery rate in percentages based on different jurisdictions throughout the US for some recent customers that we have worked with. That ranges from as low as 6.7% unregistered rate up to 20% unregistered rate. The variation will depend on prior enforcement and discovery efforts in conjunction with field work and desk work by code enforcement agents to root out unregistered STR operators. An expected return on investment, also known as ROI, can range between 300% to as high as 1,000% for a relatively new program. And here's the process by which Harmari identifies short-term rentals. It is simply a triangulation of 3 pillars of data. The first one is the short-term rental listing itself. So if Bob has a log cabin somewhere in cottage country, we can take advantage of that approximate location and the operator's name, and we can dig. Secondly, social media fills in the gaps in the identification process. Third, public records, such as property tax rolls, cell phone records, credit header reports, all help identify. Altogether, they form a purely 100% court defensible evidence chain of custody that is fully defensible if disputes arise with the STR operator and your jurisdiction. There is no backdoor data collection at all, Everything is considered open source intelligence. Here, another challenge with short-term rental identification is some operators can cross-list on multiple websites. For example, they may have an Airbnb and a HomeAway listing. Some jurisdictions have expressed concern about overestimated inventory counts based on this phenomenon. You can use features in the STR listing to identify whether they're duplicates. One way to do that is look for similar pictures in each listing. Sometimes the picture of the front of the property is the same as the other website. Another way is looking for similar title of listings, similar room size, and similar operator names. However, in practice, our company's experience is we've only seen between a 5 to 10% duplication rate between short-term rental platform websites. We've also seen an increased duplication rate when you factor in external websites, for example, bobsbeachhouse.com or bobslogcabin.com, in conjunction with an Airbnb listing published by Bob. Here's a challenge to the audience to find the phone number in this Craigslist ad. The phone number in the Craigslist ad is 916-509-2166. Why was the phone number written out this way, you ask? Obfuscation is the answer. Obfuscated phone numbers, spelled out, foil a typical digit-based phone number search in Google, for example. So if the digit 9, the digit 1, the digit 6, followed by 7 digits was searched, the search engine would not be able to discern that this was a phone number matching the digits. So Harmari Search is the only engine out there that de-obfuscates phone numbers and makes them available for easy analysis. This forms the basis of our Craigslist module as part of our short-term rental compliance project. So here's a tax compliance workflow that we've established to illustrate how our system works with yours. And the sections highlighted in solid red indicate our components, while dashed lines in red indicate components that can be provided by our partners. So if we start off in the top left, we're actually data mining short-term rental platform sites such as Airbnb, VRBO/HomeAway. FlipKey is another short-term rental website that we mine that's very popular, and also Craigslist and others. That data is fed into a cross-checking engine that collects the short-term rental raw data, identifies, and also matches up against the short-term rental licensees list of existing taxpayers. Finally, an output is produced with 3 possible results: pass, fail, and mismatch. So records that pass are ignored. Records that mismatch are submitted for manual review to the city. Finally, failed records then get fed in to the workflow associated with bringing them into compliance. Perhaps there's a first letter, a second letter, followed by an assessment. That assessment ends up being a bill that needs to be paid. Should the taxpayer agree to pay, there's a payment collection process put in place. If the short-term rental operator does not wish to comply, it can then get pushed into a collections process outsourced, or legal action may be taken. Compliance. If it's important in your jurisdiction to ensure all short-term rentals all follow the same rules and all are licensed and follow the same rules and procedures and follow code, compliance workflow will be important for you. So if we start off in the top left corner, you'll see that a short-term rental unfortunately has ended up being a party house. That party house disrupts the neighbors. The neighbors wake up angry in the middle of the night, but they have a short-term rental complaints hotline that they can call, where they can submit anonymous tips that are handled by onshore customer support agents and inputted into our case management system. That case management system then gets matched up to possible existing short-term rental licensees. Those licensees will get a real-time notification via SMS, email, or an automated phone call. From there, that short-term rental operator needs to intervene to ensure that party house gets shut down. If that operator does not intervene, your code enforcement department and your licensing department can then impose disciplinary action, which may include revoking their license. Now, in the bottom right corner, the identification process kicks in for any unlicensed short-term rentals that are operating. Our Harmari high accuracy identification process will feed critical intelligence to your code enforcement unit of the most likely culprits on the short-term rental platforms that caused that disruption. Code enforcement then can attend the property, impose possible fines and citations, including all the court defensible evidence that has been acquired by our system. Finally, if payments need to be made, that can again be processed by the city or one of our partners. There is a trade-off every jurisdiction needs to make. Do we do it in-house or do we outsource? Some jurisdictions have had great success with hiring an intern over a short-term basis to identify short-term rentals in their area. Training existing staff, furthermore, distracts them from their existing day-to-day tasks. And the seasonal nature of short-term rentals may make it difficult for staff to keep up. Another challenge with doing things in-house is the low accuracy. I've spoken with some jurisdictions which have had in the past a 20% incorrect STR identification rate. If 20% is not a tolerable number for you, you may want to look at outsourcing. Another challenge with short-term rentals in-house is there's a law of diminishing returns. Once that intern has finished all the low-hanging fruit, where all the short-term rentals who are an open book end up being identified, the remaining operators that are more elusive, those are your biggest challenges and cannot necessarily efficiently be handled in-house. Finally, the in-house limitation is always going to be 9 to 5, Monday to Friday. So if a fly-by-night short-term rental website only pops up on the weekends and comes back down Monday at 8, your in-house staff is not going to be able to find it. Yet there's going to be complaints about these short-term rentals because they're party houses. So with all these challenges in mind, be advised that an in-house solution may not work the way you want. Now, talking about outsourcing, some of the key things to look for in partnering with a vendor is how accurate is their identification rate. You need to look for identification rates in the 95% accurate range because you don't want the bill going to the wrong taxpayer. So one aspect of identification is houses are easier to identify than condos in a short-term rental platform. VRBO and HomeAway are easier to identify operators than Airbnb for the reasons I've stated earlier. And finally, property management companies are easier to identify than owner-operators by the very virtue of being a business. Another key point with partnering with an outsourcing agency is, are they properly costing out the identification portion of a project compared to the monitoring portion? That 20 to 30% inventory turnover each year, that's what needs to be costed out in multi-year contracts. Make sure your vendor takes that into account. Finally, as with all outsourcing projects, are you getting good value for the price you're paying? Are the customer service hotlines, the marketing outreaches, the collection services, are you paying market rates for those add-ons? Are you paying an appropriate amount for the identification and monitoring? And finally, is the data provided by the short-term rental identification service court defensible? If the data collection process is not transparent, this could lead to problems with liabilities down the road. This concludes this presentation. Feel free to reach out to us toll-free at 1-877-352-3277 or visit our website at www.harmari.com and click on Short-Term Rental Compliance. Thank you.